Hello, welcome to Secure Talk, your trusted source of information on the latest threats, trends, tools, and technology related to cybersecurity.
Hello, everybody. Welcome to Secure Talk. My name is Mark Schreiner, and I'll be your host for this episode of Secure Talk. Today, we're going to be talking to Albert Chon, who is the CEO of Injective Labs. And we're going to be talking about what Injective Labs does in the cryptocurrency space. So first off, Eric, how are you today?
There's a little bit delay.
Obstacle number one, unmute. Yeah, that's no problem. You're not the only one that's ever been caught on that. Whereabouts are you located, Eric?
Yeah, so I'm currently in Denver for a conference, but generally located in New York.
Okay. How's the weather out in Denver?
Actually warmer than New York, so that's surprising.
That's a good deal. I'm normally up in the Pacific Northwest, but I'm down in Arizona right now, so enjoying the sunshine down here. Hey, Eric, I mean, want to jump kind of right into this. You're 23 years old, and you're the CEO of Injective Labs. Can you tell us a little bit about your background and how did it come about that you are running a company that's an exchange for cryptocurrencies?
Yeah, I mean, just to clarify, right? Like Injective Lab is just a software development firm, so it's not really running an exchange per se. It's just building cool blockchain softwares, and that's really kind of how my background lies, where my background lies, and kind of where I got started, which is doing a lot of cryptography research, protocol research back in college, and later on joined a fund in terms of focusing mainly on market neutral strategies and cryptocurrency markets. And then, did some investments here and there with the fund as well. And that was kind of my initial foray into crypto. And in the meantime, before I started Injective Labs, I was also spending a lot of time contributing anonymously to open source softwares and just trying out really cool products on top of Ethereum and so forth. And so that's kind of why it became the final push for me to go into crypto full time.
Okay, awesome. Hey, I'm just so we get my understanding straight and get my terminology correct. I was under the impression that Injective Labs is an exchange, okay, and that you have over $1 billion in trading volume in your first 30 days. Is that completely erroneous?
So basically, Injective Labs is a blockchain development company, and it built software that eventually became Injective Chain. And then naming convention should probably be improved later on. So basically, Injective Chain is this fully decentralized blockchain that has this entire ecosystem of exchange products and so forth. And that is accurate that it did. I would say it's probably 4 billion now, but it within the launch of the first 30 days, it recorded around 1 billion.
Okay, so I mean, there's so many different areas in crypto and blockchain, and this sounds kind of like an area that's relatively new to me, probably to some of our listeners. Walk me through your business model, or walk us through your business model.
Yeah, so there are quite a few lines, especially for Injective Labs, is that Injective Lab hosts Injective Pro exchange interface, which is kind of this application on top of Injective Chain. And so basically all the users going through the chain itself pays around 40% of the trading fees to the Injective exchange front end, Injective Pro exchange front end. And on top of that, there's obviously a lot of grants and kind of these services are provided for development and contributing to kind of core blockchain softwares that really kind of contribute a lot of revenue stream for Injective Labs.
Okay, and I noticed in the notes for this, I also I believe it was on your site that it says that your platform is controlled by users, and all new markets are chosen by users. Can you talk a little bit about that?
Yeah, so on the platform, which is Injective Chain, all market listings and all the discovery and decision of new markets are very much user curated and user decided. And so basically there's a whole DAO structure and governance structure where users get to vote on every single new market listing. And there's also, kind of like an instant listing feature that has a small kind of economic gate for user to create a new market instantly. And that can also basically create a permissionless market creation process.
Okay. And from what I understand, you collect zero revenue from your users, or any fees that are generated are distributed back to the users?
So basically, there are revenue or value capture on the protocol, which is the trading fee. It kind of acts also as a gate for basically new markets and basically to feed this value to all the ecosystem participants that make this market happen, to provide liquidity on top of it. And on top of that, there's a very, I would say at the moment, minuscule amount of gas that are being charged to a user for interacting with the blockchain, just like all blockchain networks.
Okay. So if I was looking at your platform and community, and I was looking at some of the alternatives, why would I go towards Injective Labs and your trading platform?
Yeah, so I would say that for a general user, right, especially if you're new to the crypto space, or or you had a few months of experience with it, you're really looking at probably Coinbase, Binance, and so forth. And those options are great, especially as kind of the first step. But one thing you're going to eventually notice is that Coinbase can just take away your funds. They can deny your order, and you're not really capturing the best liquidity for the entire crypto ecosystem. And so for that to be fully utilized, and for you to really access to all the possibilities within the crypto space, first of all, you want to have complete control over your own funds. You don't want to delegate that kind of capital or asset to an exchange to hold for you. And there has been numerous historical incidents of hacks, and basically exchange, sometimes even like just exit scam, where the user funds are just completely gone as a result. And on top of that, just in general, um, basically decentralized exchanges often go down, and also they have service failures, and basically you don't know who your counterparty is. It might be someone who's manipulating the market and so forth. So it's really, really important to have a fully transparent kind of this address mapping, where the order book, everyone knows exactly what that order belongs to and who's placing those orders. And so then you have a complete understanding and data availability for every single participant within the market, and to understand that, and more transparency will give the user overall a lot more confidence, whether it's a latent effect or immediate effect.
Okay, let's assume that I'm on a platform like Coinbase, and I mean, what you're talking about is I need to get my own wallet, and put my currency, my coins into my wallet, and then I can trade through an exchange like yours. Is that accurate?
Exactly.
Okay, so at what point would you recommend that somebody make that move? Sooner versus later, or when they get to a certain percentage of their assets or their portfolio size?
So I would say for the ease of use, especially for a new user who has mostly fiat or other assets that are not crypto native, um, basically within a single digit percentage, it probably makes sense. Within a single digit percentage of your liquid capital, or like your asset, it probably still makes sense to stay within a centralized exchange, just because of the user experience. But as soon as you go over that level, you run the risk of having your funds stolen, hacked, and so forth. And that's actually a very, very critical issue, because like especially for historical instance, like there were KuCoin hacks, and there were like a chain of hacks for the past year, for some of the lower exchanges. And those are, immediate, those result in immediate loss of user funds. They often take a haircut. And, recently Bitfinex actually recovered that $3 billion worth of Bitcoin. And that actually took the users, years and years of waiting to even recover them. So,
Yeah, I mean,
so
that's going to be an interesting one too, because I believe that many of those account holders or users actually received some type of compensation from the exchange. But the question is now, do they get their coins back, or does the exchange get to hold the coins, or what's going to happen? Because the coins have obviously gone up massively in value, right? So, I mean, what are your thoughts on that? I mean, to kind of jump off topic for a second, but it is kind of fascinating.
So actually, yes, that's a very interesting point. So the way they did it, obviously I'm not the expert on that particular incident, is that they released a token to compensate the users. It's called the Leo token, which is, I guess, the equivalent of like BNB for Binance. And the way it works is that they have a promise to buy back those Leo tokens using the proceed from the stolen Bitcoin or the recovered stolen Bitcoin. So they're not distributing back to the users; they're just using it to buy the Leo token. So first of all, there's a little bit of transparency issue here because no one knows how much is being purchased and how fast it's being purchased. And second of all, overall, like at the end of the day, the user isn't getting the Bitcoin back. They're just getting a token that may appreciate in value as a result.
Right, right. One of the, I guess, most interesting examples that I kind of am aware of is the exchange in Japan. Was it Mount Gox?
Correct.
Where I don't know if he was the owner or the CEO, basically the guy who was running the exchange. The exchange cashed everybody out. They paid them for the nominal dollar amount of what the Bitcoin was worth when they lost it. He recovered it a few years later and basically owned all that recovered coin, and instantly became worth, at that point it was close to $1 billion. So I mean, some interesting things going on. And obviously, which leads into the discussion of security. So step number one, you're saying, is once once your crypto holdings equal 1% of your net worth or more, you should definitely look at getting your own wallet set up. And what steps would you take, or what would you suggest would be the best way to do that?
Yeah, first of all, definitely, diversify the hardware wallet holding. Don't put all of your crypto assets into one hardware wallet, especially because there are risks that there could be a manipulated or kind of tinker with a ledger wallet, and those incidents have happened before. So diversify your hardware wallet options to make sure that your holdings are spread out throughout multiple like secure locations. And to be honest, at the end of the day, the most secure, ironically speaking, wallet solution is a paper wallet.
Okay, walk us through that process. Because I know that you and your community understand how a paper wallet works, but just kind of give us a quick overview here.
Yeah, so paper wallet could be one of two things, right? It could just store the mnemonic phrase,
Mhm.
so those 12 or like 24 words, and that will basically use as an input for a local offline wallet, and basically, obviously, ensure that the wallet software is secure, of course. And then you get to send transactions, whether it's on Ethereum and a variety of other blockchains as well, including Bitcoin, of course. And so that ensures that during this entire interaction, you're not touching the internet. No one can really access your keys. It's only being stored in a local device. And so the issue with Ledger Wallet and all those hardware wallets, that there is a chance, albeit pretty small, that there could be some kind of like day zero exploits or some other security threats that could cause these hardware wallets to be completely compromised. And on another hand, basically, the entire interaction of signing also requires kind of like a software in the middle, and also for a lot of layers, basically, it's hardware wallet is not the only kind of place where it could be attacked.
You got me scared. Yeah. So okay. We step one is diversify off of and get into either a couple different or a variety of hardware wallets, or go to a paper wallet. And then when I have my crypto into the wallet of my choice, if I wanted to use a platform like yours, then what's the next step?
Yeah. So basically, right now, for Injective Pro, the relay are operated by us. The supported wallets are MetaMask, most of the Ethereum-based wallets, and also hardware wallet, which is Ledger. So basically, for it to work, you just need to connect your wallet, to the interface, and then the signing process will just happen on your chosen wallet solution. And this is why also like keeping custody of your own coins, of your own keys, is very important, because then you know exactly what you're signing, the message that you're granting, the transactions that you're processing, and you know that for a fact that you're interacting intimately on chain, rather than giving these instructions to a server that may or may not have liveness, or even some bugs that could misplace your stuff.
Okay, is there any opportunity if I'm using one of these wallet solutions and I go on to Injective Pro and I want to execute a trade, is there what are the vectors for potential attack, or maybe there are none, or maybe there are some contingencies that you've already planned for, but what do I need to be concerned about in terms of, okay, I'm going to use this platform to do my trading? What are the opportunities for a hack or some type of interruption to happen there?
I think all in all, like the most important thing would be in verifying the domain, and kind of making sure that this is indeed the website that you're interacting with. I would say that that's certainly the most important part, because there's a lot of websites and crypto applications that are currently undergoing a lot of scammers and attacks from these type of like kind of like almost like a pineapple website, where they just like look and feel the exact same, except the transaction messages and so forth are sending money to someone else. So
Right.
on top of that, another really important practice is to look at the transaction message that you're signing, because generally it's I would say pretty readable JSON format that you can just verify as like, oh, like this is indeed what I'm doing. And this is actually quite important, because basically people generally have this habit of just signing messages without even thinking twice, and obviously it's not a sustainable solution long term.
Okay, so when you say it's in a JSON format, are you at the point right now that in order to use your platform to trade, you do need to have some type of development or coding background, or are you at the point where somebody like me with no real coding background can go on and set up an account and start trading? I mean, or are you going to evolve to that point?
Background is not required. This is mainly for a point that verify a domain.
Hmm.
That's the first step of good practice, I guess.
Yeah.
And if you have a little bit of coding background, and honestly, like JSON format isn't that hard to read, because you're just looking at at the end of the day, they're so like human readable, like
Right.
words, right?
Yeah.
So you don't have to understand the structure of it. You just have to see what message you're actually signing. So that is for kind of like the second step, where like you want to make sure. So I would say like like for a general user, verify a domain. For seasoned user, verify a JSON.
Okay. Okay. Now I want to keep going through this process because it's interesting to me, and it's something that I'm going to do. Um, so I've got my wallet set up. I put my crypto into them. I've set up an account on Injective Pro, and I want to do I've verified the domain, and I've set up my first trade. How do I tell? Because like if I'm using Coinbase, for example, I can see, what the commission's going to be, what the offer, the buy sell rate is, everything like that. How do I see on Injective Pro in terms of, is it just who's offering? You just see all offers, or can you organize them by, how does that work?
Yeah. So basically, different exchange front ends, or
Hmm.
like these applications on top of the injective chain can display the markets so they choose. And
Okay.
this creates this tailored experience for users. I think so far there's like around 5 of these exchange applications on top of the injective chain. So basically, some of them can offer perpetual only markets, some of them could offer, prediction markets, some of them could offer community specific like Terra based markets and so forth. So that's the first step would be, for you to pick the exchange that you want. And Injector Pro is more of a, more generalized interface, where it just displays most of the markets that has sufficient liquidity for a user to interact on. And So practically speaking, yes, you go on Injective Pro, you can see most markets that you can trade.
Okay, and then I select a market. It's going to have its own UI. I'm going to go through and go through and make my trade. And one of the issues that I have, like with if I'm using an online brokerage for stocks, or and I don't know with the cryptocurrencies, but for example, if I'm buying or selling stock, they will sell you they will show you the outstanding the outstanding offers to buy, and you don't know if you're ever actually getting the best price, because there's opportunities for front running. There's you're kind of at the mercy of the exchange, and they can manipulate the trade to kind of take a cut on, in addition to their commission. They can manipulate the trade. How does it work in this environment, your environment? Can I
Yeah,
see the exact offer and I get it for that exact price?
so that's not going to happen. Like all the issues you described for brokerage model, that's
Yeah.
not happen on Injective Pro, and simply for the reason that you first of all you can set up a market order with a worse price. So if the execution ended up being worse than that price, you can just stop it. And on another hand, the entire order book is, displayed in front of you, so you know exactly what are the liquidity levels at each price level. You know what is the expected execution cost and so forth. And more importantly, front running is impossible due to the chain mechanics of injective chain, because there's a end blocker execution. Without going too much details, but basically it adopts a frequent batch auction model that matches everything at the end of a consensus round within that block. And on top of that, cancellation is processed before anything else, so you don't have to worry about your open orders getting caught during a market movement.
Okay. And then, so I execute a trade. I'm assuming that the transaction times are relatively quick. I guess it depends on how I've submitted my order. But if I want to buy something at the market or what the current offer is, I submit the order. The order happens. Again, now the crypto that I've either bought, well, let's assume it's a buy, is now back into my wallet. Correct?
Yes, correct.
Okay. So at that point, I'm no longer dependent upon the exchange. So if I'm using Coinbase, I do the trade. I'm still really dependent on Coinbase. They're holding my coins, right? In this environment, I can walk away and I'd say, you know what? I don't care about the future viability of that market. I'm not worried about if I read the headlines tomorrow that says something, hey, they had a hack or this or that or the other. As long as I've got the coins in my wallet, we should be all good. Is that a correct assumption?
Yeah, that is correct, because it's a non-custodial platform.
Excellent. Okay, so you're selling me on this. I'm warming up to the idea. I like it. So you do mention that again, I think we touched on this earlier, that developers have an opportunity to create new markets. What types of new markets are you seeing?
Yeah, so far it's been kind of a vanilla market proposal that are going on, just because like the community and everyone are just warming up to this market creation process. So they're starting off with the more obvious ones. So I think there are currently 4 perpetual swaps market, and like 10 or so spot markets live on the Injective chain. And obviously over time, as there are more and more well versed within the market creation process, there's so much more interesting markets that can be explored. So during the testnet phase, we just went ahead and just experimented with a lot of those interesting markets. For example, like commodity futures, staking derivatives, like floor price perpetuals, NFT perpetuals, and also a lot of other interesting products, time expired futures and so forth, that basically was well tested and waiting for the community to take a chance to explore.
Yeah, now, so it's interesting because you can build the exchange, but how do you encourage the traders, because to move their business over? For me, if we just talk about the crypto, for example, it obviously makes sense. If there's a large enough market there where I can buy and sell at a reasonable, I guess for lack of a better word, rate, um, then it makes sense. But if I go and join this exchange and 99.9% of the whatever's being traded, and you mentioned futures, for example, is going to be on one of the more traditional exchanges. At what point, I mean, how do you bring traders over?
Yeah, so I mean, for our case, it's all about building, the best possible software to support an ecosystem.
Hmm.
Uh, Obviously, within the chain level, and there's obviously a lot more participants within the ecosystem to make other components happen as well. But first of all, number one thing is getting liquidity, getting those professional market makers and institutions to start providing those very critical buy and sell side liquidity for any type of market. And this way, basically, for users that are exploring and looking for a strong decentralized option for their trading habits or trading experience, then they'll find that like the liquidity will be superior compared to some of the other counterparts as well. And the second more important factor is this incentivization cycle, where oftentimes exchange tries to price differentiate with lower fees, better discounts, like interesting funding rates for perpetual swap markets, and so forth, and just to create this incentive for people to really bring it on. And sometimes there are also exchanges that kind of give up some upside for the platform by I think incentivizing market makers to create a premium in the price so that people can just come on and trade as well. I think for the Injective Chains case, basically there was a proposal to add like an on-chain mechanism to reward for every single fee generation, which is a proxy for like trading volume. And so this allows for users to also be rewarded for kind of even just executing a successful trade. And that's actually been a huge incentivization for growing so quickly, because users are paying the fees, and obviously fees are never the best for any user. And but right now, like they get rewards that are more than the fee itself.
Okay, I'm just curious, putting my business development hat on, are there any platforms such as yours, or maybe some of the the exchanges that have been built on your platform or out in the marketplace that go and approach, let's say, a traditional but tier 2 or tier 3 exchange and say, hey, look, you're tier 2, tier 3 right now. One possible option for you to jumpstart the players 1 and 2 would be to offer this decentralized exchange, through the blockchain, and basically you would reduce. Ideally, you might be able to reduce your overhead and then therefore obviously reduce fees. But because they already have a certain book of business, they're already market makers. They could instantly have that kind of critical mass to a new exchange. Does that make sense at all, or does anybody have those kind of? Or do you guys have those kind of conversations?
Yeah, I mean, like that is actually part of the incentive kind of mechanism as well, which is to reward some of the folks who provide critical liquidity that surpasses a certain threshold. And it's kind of like a monthly rewarding mechanism to make sure that these market makers are putting up capital, risking on to provide these liquidity. And yes, this is very, very common amongst pretty much all exchanges.
Okay, and let me jump tracks again here. So I read in the brief that the Injective Labs was incubated by Binance.
Yeah.
Okay, and I've heard that you have some other investors as well.
Yeah.
So how do your backers, how do they gauge your performance? What are they looking at? What are the metrics that are most important at this stage in your development?
Yeah, I would say generally speaking, especially for a protocol level, and more being considered as, I would say, like a deep tech kind of software company, it's really about, like technical soundness, basically the development progress and the overall, architectural design, because obviously, our backers are generally um, folks, investors, or industry leaders within the space that have very fundamental understanding and very critical understanding about like what might work and what might not work. And for them, it's really about investing into a critical piece of software or a critical piece of protocol that will provide value overall. And for Binance's case, it's again about creating this or supporting projects that are building decentralized exchanges and decentralized platform softwares to basically, I think they used to say that they want to disrupt themselves and basically placing this bet.
Okay. So what if you look out in the market and you were looking at similar platforms, what heuristic would you use to evaluate them as a viable investment or not? Because if you talk about their tech soundness and development progress, I mean, I don't know how you create a metric on that. That is very, very analytic and I guess somewhat subjective. But like if you were to look at competing platforms and say, hey, this is how I would choose whether this I think is something that has some legs or not. Is there any other metrics that you can look at?
Yeah, I would say that's actually extremely difficult because um, I'm blanking on the name of this phenomenon, which is like basically if you assign a single metric to decide on certain things, that metric is going to be abused.
Right.
So overall, kind of in the grand scheme of this entire industry, is that in order to make the best possible decision and in order to fully evaluate things, a single metric or a single set of metric is never enough, because there's oftentimes where people just maximize those metrics and create this false sense of sustainability of the protocol or the ecosystem. And so the more important thing is, like to be able to kind of base your metric, base your decision around a certain metric, but having enough understanding and expertise almost to remove some of the tactics or some of the mechanisms. So basically applying very, very in-depth discount factor to those metrics at the right place at the right time.
Okay, that makes a lot of sense. Hey, I got to be honest. I mean, I came at this conversation. I prepped from it more from like an end user's point of view, right? How would I use this platform to trade? And what I really understand is that you're building a platform to support exchanges, and that's why obviously the technical depth and soundness of the platform is hugely important. I'm just wondering, from your point of view, then, how do you judge your success? And again, it comes back to what you said, the technical soundness in development progress, but you must have some kind of milestones that you look at. I mean, how do you measure that?
Yeah, for Injective Labs case, it's really about building, the most interesting mechanisms that fully utilize this chain. So one of the few things that we're working on, and there are very easy metrics to go by it, because obviously for the exchange platform and the chain itself, I would say volume is key, but at the same time, volume is also very much of an improper metric because of value creation from those volume really, really varies.
Right.
For example, like for some of the other decentralized exchange platforms like Uniswap, there's almost zero value created from all those volume, because the fee is directly going to the liquidity providers for compensating their impermanent loss, right? So it's essentially like a net zero thing. So it's kind of improper to call it, like a protocol revenue per se. And so I would say overall, it's like true value accrual for ecosystem participants after obviously netting out costs and losses, which is often overlooked in the a space a little bit. And for milestone wise, like Injective Lab is building a lot of very, very interesting, I would say, smart contracts and softwares to be able to support this overall chain and ecosystem. And one of the most exciting things that we're working on currently is an on-chain kind of this market making contract that allows users to kind of deposit or delegate their capital to this contract. And the contract will execute a set of on-chain instructions to place those market utilizing um, really state of the art, like market making models that are used by some of the largest proprietary trading firms and hedge funds in the world, to basically be on the same level or same playing field as these billion-dollar funds. And that's extremely exciting because, first of all, it's community curated, so these strategies can be uh, adjusted, improved, and community members can generally create these new strategies by themselves. And on top of that, the most amazing thing is that the capital can be pooled into these strategies to basically allow anyone to gain the upside and really democratize the overall market making process. Because currently within the space, I would say that like for a project, for a token, for an ecosystem to achieve liquidity, to have someone who's actively providing this I would say um, critical support of price discovery. It's really important to engage with a market maker, but generally like those cost burden and so forth is far higher than a traditional market maker or designated market maker within the equity space. And so this is another really, really important or interesting component where basically this market making process is further decentralized as well.
That's a lot to think about there, and it sounds very cool. Let me ask you just a couple more questions. First off, if I'm a developer, I'm looking at different platforms. Uh, why should I go with Injective Labs, or the Injective Pro?
Yeah. So for Injective Pro's case, it's a very seamless experience. Your keys, your coins. Um, you get to try out state of the art perpetual markets, explore the leverage, really interacting with a fully decentralized derivatives platform. But to be a Injective chain user or community member and so forth, I think that's really where it gets exciting as well, because then at that point there's so much more tools and exposure that was never possible before within a decentralized finance space. Number one is that there hasn't been really a order book based fully on-chain exchange infrastructure within the Ethereum and most of the ecosystems um, um, in the space. So with that in mind, like a lot of the DeFi applications, a lot of the decentralized exchanges currently, utilizing the automated market maker AMM model, which is a CFMM, which is constant function market maker, is basically kind of like a capital inefficient form of market making. Because first of all, it's static. It requires a lot of arbitrageurs to kind of make money from these people providing this liquidity. And so having that dynamic, expressive, order book based liquidity that is very much obviously similar to what the current equity market, global market looks like, and it's also very much more representative of general market behavior and user behavior is a very critical piece of infrastructure that was missing within the Ethereum DeFi space for the longest time. And with that in mind, um, with those order that can be composed, that can be used, that can be delegated, it creates this entire ecosystem where like this infrastructure level tool can be utilized by smart contracts, can be utilized by other DeFi protocols to fully leverage this liquidity, to leverage this exchange mechanism, to leverage this matching mechanism to build very, very interesting dApps or applications that are never possible before.
Sold. Now that's a very insightful but also a convincing pitch on why the injective chain it should be considered. Hey, where would you suggest if people? Oh, well, actually, where do you go to kind of keep abreast of? Because I mean, obviously, you're focused on running your company, but what information sources do you look for to keep abreast of what's going on in your space?
Yeah. Are you talking about like in general, or like news outlets, or like
I would say, yeah, but anything that's going to like keep you kind of aware on the technical side of what's going on in your space. So news, I mean, oftentimes it tends to be a little bit more business focused. But yeah, I mean, if you want to understand really what's going on and what you need to be aware of, and possibly that will help you kind of improve your platform, where do you look?
Yeah, so for Injective's community, there's first of all, governance, which is gov.injective.network. There's also Hub, which is kind of this one-stop shop for like everything chain related, which is hub.injective.network. And there's some, stats here and there that's done by like a lot of third-party contributors. And those are kind of like all over the place. Could be like CoinGecko, CoinMarketCap, and chain explorers, so forth. So those are pretty interesting as well. And for the overall, I would say like industry wide, definitely, like surprisingly, even for like technical discussions, it's a lot of Twitter.
Okay.
It's a lot of Telegram groups. It's a lot of newsletters. I think those are actually very, very important for gaining that technical understanding.
Awesome. Thank you for that. And last question, what are your expectations for 2022 in terms of the growth of your platform and your company?
Yeah, I would say first of all, focus a lot on building those applications, getting it out as soon as possible because it's something we're really excited about. And then overall, seeing the ecosystem grow, seeing the overall community member, participating more and more, that's also very, very important as well. And on top of that, really basically expanding the utilization of a lot of the application we're working on and a lot of tools we built. For example, there's this tool called OffZ that we have been, building a very broad suite of applications around. And OffZ is this, pretty interesting thing where users can delegate or give away the permission or grant permission of executing a certain message to another person, to another address, and a little bit down the road in a few months to a smart contract to execute those messages on the user's behalf. So this is very, very interesting when interacting with the exchange module of the injective chain, because then people can basically, let's say some user is more of an institutional type of guy, or doesn't really trust smart contracts, which often could be the case because it's rigid and it might not generate as much alpha per se. So that user can grant trading permissions, obviously not withdrawal, not deposit, to another user or to another contract to make these to execute these trades on that user's behalf. And this actually this is actually a very, very crazy feature because there's also a lot more cooler things you can do on top of it. Like Injective Pro can totally utilize this OffZ module to have users grant the permission to like a locally hosted key, and users don't have to sign for every single trade. It makes the trading process a lot faster as well, if so they choose. And it also enables stop loss orders and so forth, like those advanced order types. And yeah, it's one of those. So I would say this year it's all about exploring all the possibilities that this protocol can bring, and building the tools to make it and present it in front of a user.
Sounds pretty exciting, and I've been taking like a page full of notes here. I've got some homework to do. So hey Eric, I really appreciate you taking time to talk with us. I've learned a lot here. I am going to make an attempt to start trading using a paper wallet on a off of the regular exchanges, and I'll let you know how that goes. But you've got a very convincing, I guess, argument for doing so, and your platform. I did take a look. I mean, in terms of your numbers of partners and things like that, I mean, how do you quantify that? Because it looks like you have a really robust community right now.
Yeah, I try not to quantify that. I just think about it in terms of like the applications and like the integrations that are being done, because again, like this space is very collaborative, so it's everyone wants to work with each other. So in terms of quantifying that, number of partners definitely helps, but at the end of the day, it's all about like the application and what these partners can help bring to the Injective ecosystem. And obviously every partner is extremely unique on that front.
Sure. Well, hey, again, I really appreciate your time, and I wish you the best in 2022.
Thank you so much. Likewise.
Thanks.
Hello, welcome to Secure Talk, your trusted source of information on the latest threats, trends, tools, and technology related to cybersecurity and compliance.